Soldiers, for the last 3 years, millions of you have been trapped. You're living in a house that's too small, too far from work, or just not right for you and your family anymore. But you can't move. You won't move. Why? Because you're chained to a golden handcuff, your 3% mortgage rate. So if you sell, you have to take out a new loan, and today's rates are somewhere in the neighborhood of 6.28%. So you'd effectively be doubling your monthly payment and resetting your entire financial future. And that is representative of one of the major problems with home affordability in the United States of America today.
So affordability taking center stage at the White House, as pollsters warn, housing and healthcare must be the message. To so many struggling Americans. It comes as a new study out this morning suggests new homeowners are better off building a home rather than buying one, since they tend to require lower down payments and a lower mortgage rate. Host of Making Money on Fox Business, Charles Payne joins us now. Charles, does that surprise you?
It surprises me historically, but we've been moving in this direction for a long time. The problem with existing homes is the homeowners typically have low mortgages, right? So if you have a mortgage rate of 3%, do you sell a house, even if you make a pretty nice profit, and buy a new house at a 6.5% mortgage? The answer is no. And that's what's created this real problem, this dynamic. When inflation shot up under Biden to 9.2%, the Fed came and they were so late that they aggressively hiked interest rates. And it's created this thing where mortgages are so lopsided that no one wants to sell. And consequently, new homes actually are cheaper than existing homes.
Hey, let's just say it, because for people listening on the radio too, can you put that full screen up again? So this is it. I mean, if you see if you see existing homes, new homes are 5.27% on the mortgage rates, existing homes 6.2, new homes in terms of down payments 15% down, existing homes 17% down. New home is $30 more per month, with less cash up front. And a lot of people prefer to get.
We've just seen recently where a record number of home sellers, new home sellers, are lowering their rate, lowering their prices, and offering more incentives. So they are trying to move these houses now because the supply has grown, in part because of the affordability crisis. Ironically, markets take care of themselves sometimes. You know, there's an old saying among economists that the cure for high prices is high prices.
Absolutely. And, you know, that's emblematic of how out of whack the housing market is, because along with that affordability issue, okay, so they talked about the fact that it's, you know, in many instances more cost effective to purchase a new home than an existing home. But what happens once you purchase a new home? It becomes an existing home and gets locked in under this current rubric of people not wanting to move out because of the interest rate pressure. So we're dealing with that. We're also dealing with the phenomenon that the average age of a first-time home buyer in the country today is 40 years old. Now, that's a troubling sign for our economy. But what if I told you that the government is about to hand you a golden ticket, a way to pack up the 3% mortgage like a suitcase and take it with you to your next house? So what we're going to do is we're going to take a look at the portable mortgage. Now, this is one of the best ideas to come out of this Trump presidency in terms of actual affordability, a solution to the affordability crisis in housing. It's actually the biggest shakeup, if they can get it done. It's the biggest shakeup to the housing market in a generation. And it could unlock millions of families, letting them pick up and be able to unlock that market. Okay. Could also drive prices higher as well. We shall see.
The White House has another unique idea to unlock the stalled housing market after floating a 50-year mortgage over the weekend. The administration is now looking into portable mortgages, which would allow homeowners to transfer their current rate from one house to another. So in theory, this would push homeowners who were locked into a low rate to list their house, opening up more sales. And Katrina, why this feels more palpable to me than a 50-year mortgage is this is trying to at least address the supply side versus a demand side.
I agree with you 1,000%. I think that the affordability crisis is not going to be solved by one policy alone. But I do love this idea of being able to take your mortgage. Like, can you imagine you have a 2 or 3% mortgage, you haven't been able to move, and now all of a sudden you can take that to another property? It will open up supply, as you mentioned. The 50-year mortgage, I didn't like that idea. I understand that it was just presented as one tool in the toolbox, but ultimately you're paying so much interest. And I understand that the payments are going to be lower per month, but I just don't think that it was the best solution. However, I do commend President Trump and the administration for trying to solve the housing issue. I do think we need to also eliminate red tape. Because so much.
We call it blue tape.
Oh, yeah. Blue tape. Oh, I like that. I like that.
Never.
Okay, so look, let's understand the problem. The housing market, it's frozen. We've got a record low inventory. Nobody wants to sell, right? Why? Because over 60% of homeowners have a mortgage rate under 4%. And again, right now we're in an above 6% environment. So if you were to get out of that 3% or under mortgage, under the current rules, you'd have to expose yourself to a 7% rate, up to a 7% rate. And that's just financially unfeasible. It's unwise, okay, for most middle-class families. So that phenomenon has created a lock-in effect that is actually suffocating young families trying to buy and existing families trying to grow. Again, we look at that age 40, the average age to buy the first home, because nobody's moving. And when nobody moves, then you have fewer houses actually on the market. And it goes back to the old law of supply and demand. When you have a bunch of people after a limited amount of resources, what happens? Prices go up. Although we are starting to see some prices moderate in certain areas. Now, it's very important for you to remember when we talk about home affordability, understand that unlike the stock market, the residential real estate market, the real estate market, period, that's not a national market. So when they give you a national number and say, oh, houses are down X%, that doesn't mean anything until you look at the actual neighborhood by neighborhood stats of where you want to live. All right. Coca-Cola. You can buy a share of Coca-Cola in Baltimore at 10 a.m. and do the same at the exact same time in LA. And it's going to, all things being equal, cost you the same. That's a national market, not housing. Okay. So the Federal Housing Finance Agency and the Trump administration, they know that this is a trap for the economy if this keeps on in the way that it's going. People can't be expected to, a country that gets its young people into a home the first time at 40 years old at a 30-year mortgage. Come on, right? So the administration is looking at ideas. They need to thaw this thing out. They thought about the 50-year mortgage, which was a bad idea. And so now we're at the portable mortgage. All right, so how does this thing work? Simply put, a portable mortgage is going to allow you to transfer your existing mortgage loan, including its interest rate and terms, to a new property when you move. So let's say you got a $300,000 balance at 3% on your current home. So you sell that home, and instead of paying off the old mortgage and getting a brand new mortgage, your bank or lender would say, all right, we're going to allow you to apply that exact same loan to your new house. All right. So let's say your new house, I don't know, costs more money than the old house, which is usually the case. Let's say your new home is $450,000. So you'd port over your $300,000 mortgage at 3%. And then you take out a new separate loan for the additional $150,000 at whatever the prevailing interest rate is at that time, say 6.28%. So you essentially are blending your old low rate with a new higher rate, still saving you thousands of dollars every month compared to a full refinance. And you're going to have to remember that this arrangement would be primarily reserved for people who have Fannie Mae and Freddie Mac loans, those government backed mortgages that about half of U.S. homeowners have. Okay. Loans outside that, they are not encumbered by any FHA rules. They could do their own thing. They don't necessarily have to honor this if and when it is implemented. So, sounds good, right? But, with everything in life, there is a trade off. There is a catch, so to speak. This could drive prices higher. So if millions of homeowners, okay, suddenly feel free to move, they get unlocked, that could flood the market with buyers, and that's going to drive home prices even higher. Now, this will help existing homeowners, but our 40-year-old first time home buyer is going to be affected adversely. May even see that 40 tick up to 41 or 42. So this mainly benefits people who already own a home with a low rate. It doesn't solve the affordability crisis for those currently locked out of home ownership. But it is true that we probably would not see a whole slew of people just get up and do this just because now they can port the mortgage. If this is going to be a new rule, then presumably you'd be able to do that at any time. So if I'm planning on moving out of here in 5 years, regardless of whether or not there's a portable mortgage, I'm not going to do it sooner just because tomorrow they say, hey, we got the portable mortgage ready for you to go. Now, in totality, we're dealing with hundreds of billions of dollars. We're dealing with a lot of, red tape, like the lady mentioned earlier. So this wouldn't be just a flick of a switch. Trump signs something and we're off to the races. This is going to require lenders to fundamentally change their systems. And there are going to be some complex, very complex legal and regulatory issues around who services the loan, appraisal value, transfer fees. And this could face pushback from the banking industry. They profit from new loan originations, right? So you might expect their lobbyists to come out and, push back on this a little bit. But it also could mean good things for the bank if they're able to get this housing market going and they're able to realize the origination of more loans, okay? Especially that first time buyer being able to possibly get in, unless we see an influx of folk just say, hey, let me move right now because I can port the mortgage. I think that's improbable. So the FHA is actively studying this right now, but don't expect it to happen anytime soon. We're looking at late 2026 or early 2027 for actual implementation. Okay, so the portable mortgage, it could be a game changer because it does, in essence, offer millions of middle class families the opportunity to unlock the ability to move. All right. But it also has the potential to supercharge demand in an already inflated market. I've told you why I don't believe that would necessarily occur. But if it did, it would make it even harder for the next generation to get a foot in the door. And that goes off onto some other issues, including wages and affordability in other areas of the economy. So I want to know what you think. If you could, would you do it? Would you port your mortgage? Would that give you the incentive to get up and, buy a new home? Would you do it immediately or would you wait? Do you have any consternation about this plan driving up home prices even higher for your kids? Listen, we're starting a new weekly segment. It's called The Bottom Line. If you have a question about your 401k, your debt, any aspect of your personal finance, I want you to send me that question. You could send me an email at Tyrone Keys, Keys, at yahoo.com. And we will get that question answered for you on air on the Bottom Line segment that we're doing right here on the Soldiers of Finance channel, Saturdays at 5 p.m. Eastern live. We want to help you navigate this 21st century economy. And we're not going to do any, jargon. We're not going to do any, shock jock condescension. This is just real talk to help you better prepare your finances to be fit for the long run. So send your question to TyroneKeys@yahoo.com, and let's navigate this situation together. I'll talk to you soon.